Welcome to Pro News Weekly. Let's dive into the latest updates on the financial markets. The dollar couldn't maintain its footing, U.S. stocks are retreating, gold is preparing for an important assault, and Bitcoin is postponing its new upward move. The U.S. dollar has fallen to its lowest level since August 2022. Inflation's reluctance to accelerate has brought back fears of a recession in the U.S. economy. A slowdown in domestic demand may explain the unclear dynamics of consumer prices. If the trend for lower inflation continues, the Fed will have good reason to cut rates. The futures market has increased the probability of 3 acts of monetary easing in 2025 from 22% to 28%. The chances of one cut have fallen from 39% to 31%. Along with this, Treasury bond yields and the U.S. dollar have collapsed. The ECB most likely ended its cycle of monetary policy easing in June, while the Fed intends to resume it. This divergence is driving the Euro-USD rally and contributing to the decline in the USD index. The situation is exacerbated by the White House's ongoing criticism of the Fed. Donald Trump is calling on the central bank to cut rates by 1 percentage point. Vice President J.D. Vance called the Fed's unwillingness to ease monetary policy negligent. The S&P 500 rose for an extended period on expectations of a trade agreement between the U.S. and China. As soon as Donald Trump announced the signing of the deal, a sell-off began. At the same time, disappointment hit the market. A series of strong data on the U.S. economy made investors believe in the best. However, the reluctance of inflation to accelerate is causing concern about weak consumer demand and recession. Greed is at the heart of the S&P 500's more than 20% rally from its April lows. According to a Bank of America survey, individual investors have been buying U.S. stocks for 25 of the last 26 weeks, which is a record. The market believes that the peak of the trade wars has passed and that the U.S. economy is on solid footing. As a result, the S&P 500 is within arm's reach of its historic high in February. In reality, the U.S. economy continues to cool. As the 90-day tariff delay expires, greed will give way to fear. This increases the risk of an S&P 500 pullback. The insatiable appetite of central banks has resulted in an increase in the share of gold in reserves to 20% in value. Precious metals have surpassed the euro's 16% share. Only the U.S. dollar is ahead, with 46%. In 2022 to 2024, regulators increased their purchases to more than 1,000 tons annually. As a result, their combined gold reserves grew to 36,000 tons by the end of last year. They are now very close to the record set in 1965 of 38,000 tons. The weakening of the U.S. dollar and falling treasury yields support the gold price. The reluctance of U.S. inflation to accelerate under the influence of tariffs and the cooling of the economy increases the risks of resuming the Fed's monetary expansion cycle as early as September. Until recently, the futures market has not been pricing a rate cut until October. Geopolitics is playing in favor of the precious metal. Iran is threatening to attack U.S. military bases if negotiations on its nuclear program are disrupted, and the White House is ordering officials to leave the region. Gold is a safe haven asset. Demand for it is growing as the risks of a new conflict in the Middle East increase. The future fate of the precious metal will depend on the resistance test at $3,400 per ounce. The retreat of U.S. stock indices from local highs has caused Bitcoin to take a step back. However, as long as the White House supports digital assets, there is no reason to doubt the strength of the upward trend in Bitcoin. Donald Trump has promised to make America the crypto capital of the world. Vice President J.D. Vance called tokens a multiplier of U.S. economic power. Treasury Secretary Scott Bessent said that backing stablecoins with treasury bills and other dollar assets would increase the spread of the U.S. currency around the world. He predicts that over the next few years, the market capitalization of stablecoins will grow from the current $250 billion to $2 trillion. Citigroup forecasts more modest growth, up to $1 trillion by 2030. Stablecoins provide ready access to a proxy U.S. dollar, making it attractive to countries suffering from high inflation and unstable currencies. At the same time, the entire crypto industry is becoming more popular. Growing interest in it is becoming an important driver of the Bitcoin rally. Central banks will dominate the third week of June. The key event will be the Fed meeting. The futures market does not expect a resumption of the monetary easing cycle. However, updated FOMC forecasts will be presented following the meeting. This includes the federal funds rate. Derivatives predict that it will fall by 50 basis points by the end of 2025. If Fed officials see a different figure, there will be a reassessment of the prospects for dollar pairs on Forex. Investors do not expect monetary policy adjustments in Japan and England. Only the Swiss National Bank is likely to lower borrowing costs and hint at continuing the cycle in September. Rates are at risk of falling below zero by the end of the year. The Bank of Japan intends to announce a reduction in bond purchases under QE. It is under pressure from the White House. The U.S. Treasury is calling on Kazuo Ueda to raise rates. The regulator's hawkish rhetoric will strengthen the yen. Investors will be watching U.S. retail sales statistics, which will clarify the outlook for domestic demand and the economy. Negative data could fuel rumors of a recession. This would be a blow to both stock indices and the U.S. dollar. Follow the updates on global markets in Pro News Weekly. Like, share, and subscribe.